So you want to know how much money you can make day trading futures, especially the micro future contracts. Everybody wants to know how to make money. How much money will they make trading? But nobody ever asks how much money can they lose? Today we're going to talk about trading the micro futures, what you can expect, how much money do you need, and what is a realistic target when trading the micro NQ or the micro ES. Breaking it all down right here in this video, so make sure you stay tuned. So pulling up the platform behind me, the Iron Beam app, this is what I'm using for trading futures right now. As you can see, I mean, it looks a lot like trading stocks, right? I'm buying low, I'm selling high. Simple idea. Trading futures is very much like trading stocks. When I'm trading the micro NQ, if let's say we go from 95 to 96, that's a $2 profit off of buying and selling one contract. When you start to do the math, you start to think about how much profit potential, how much money can you make trading the micros. Well, it really comes down to your overall account size. For me, the big rule that I have right now is I'm not willing to lose more than 15% of my account per day. That seems like a lot when you think about, like, oh my gosh, you're going to lose 15% of your account. But you have to also think, if I'm trading with a $2,000 to $3,000 account, 15% is not a massive loss by any means. The focus here for me is that on a good day, you know, I'm making 20 to 30% on my account size. And then on a bad day, I'm only losing 15%. Using today as an example, I made $515 trading the micro NQs on the NASDAQ. Did it live on YouTube, posted another video showing you guys the trades. Making $515 trading the micros is a very good profit day. And the one really nice thing about trading the micros versus the minis is when you first start out trading the micros, you can learn a strategy, you can build a strategy around trading futures in general, and then moving up from the micros to the minis. In theory, you know, the idea is pretty much the same way the market's moving for the micros, it's also moving for the minis. So if you're able to be profitable, consistently profitable trading the micros, well, really, you should be able to then step up to the minis. So the nice thing about trading the micros is it's a stepping stone to the next size contract. So every dollar move is going to be a $20 move on the mini. So doing the math here, what you can expect trading a $500 account with the micros, let's say your maximum stop loss on the day is 15%. That's going to give you a maximum stop of $75 per day. This is the big focus here, right? Because you can't afford to keep losing because you're going to hit your max stop and you're going to be done for the day. So your profit target should be anywhere from $100 to $150. And I think that's very doable, like I said. So with the 15% maximum drawdown, you're risking $75 for the possibility of making $100 to $150 in profit. And again, guys, if you can do this consistently, you're going to grow that at $500, and then that stop loss is going to get bigger, and then obviously your profit's going to get bigger as your account grows in time. But the plan here is to stay very strict with your overall stop loss, making your 15% daily stop loss, like that's my max. Like I can't afford to lose any more than that. If I hit that, I'm done. I got to walk away. But I got to understand that there is, you know, there's going to be a little drawdowns. Maybe you enter a trade, maybe you're down $10. You're going to have wiggle room there, right? Most of your trades, I'm thinking you're going to risk maybe $15 to $20 maximum, because you're thinking if your max loss on the day is 75, well, then you've got, you know, like 3 or 4 trades that you're possible to lose. But if you're losing 3 or 4 trades in a row, well, there's probably something else going on during that day. Maybe the market's choppy, or maybe your strategy is just not right. So that should be also like a red flag. Like if I have 4 trades in a row that I'm losing on, there's something not right? There's something not right. So those are the numbers. That's the breakdown, you know, trading with a $500 account. With a $1,000 account, everything kind of just doubles. So now you have, you know, $150 per day in terms of your max stop. And then obviously your target would be maybe $100 to $200, you know, $300, depending on what your overall account balance is. But you really should be focusing, I think the number one rule to focus on here is that 15% maximum stop loss per day. Remember, I'm saying maximum for a reason. Like, I'm not saying you should hit that stop loss every day, but I'm saying like that's the max point where you're like, okay, I'm done. And just for an example here, like let's say you're buying here at the 12,900 level and you get a push all the way up there at 12,940. So let's say you sold here at the 930s. That's a 30 handle move times $2. That's $60. So that one trade right here goes from like 2:30 till about 3 o'clock. In about 15-30 minutes, you can make that target. If you're trading 2 contracts, obviously that would be $120, $130 per day, or on that one contract alone. So you can see there's very much potential to hit that profit target very quickly here. Like you don't need, hours and hours of moves. Like you can see that there's plenty of action, again, like from the 850 level up there to 900. That's around a 50 handle move. So on only one contract times 2, that's $100 in profit just off of one trade right there. We talked about just a minute ago that breakout. So we got the breakout. You get one trade, that's $100 in profit, and that's only trading, with a $500 account. A lot of people have a fear. A lot of people have a fear of trading futures because they're like, if I end up shorting or I end up getting long, I can end up losing more money than I have in my account. The nice thing about having a maximum daily stop loss is once you hit that stop loss for the day, like your account's going to basically say like, hey, this is your auto liquidate amount. If you set it up the way that I have it set it up, having that maximum stop loss on the day, 15%, you really should never even get close to a point where you're going to obviously, lose more than you have in your account. There's always risk. I want to make that very clear. There's always risk when it comes to trading, but having the right rules, having the right discipline. I will say that I'm not a huge fan of having a daily goal. What I like to do, like I said, is if I can hit my 15% stop loss on the day and I'm done for the day, okay, I walk away. That basically stops me from over trading, from blowing up my account, because then I'm locked out, I'm done. 15%, no matter what, I got to walk away at that point. But for my profit, obviously, if I can get 20, 30, 40% profit per day, well, then that small loss from that 50% day is not going to matter in the bigger picture. And we obviously want to keep winning. We want our winners to be bigger than our losers. So our profit targets need to obviously be bigger than our losers. Today was a really good example of the potential from the 850 level up there to 950. That's a 100 handle move. So if I have one contract, remember, one contract, every dollar move is $2 in profit. If I get 100 handles, $100 in that contract to move, that's $200 in profit with only one micro contract. Today alone, if you look, we had a $100 move. I mean, almost, let's say like $200 move out of the open there. We had another move from the 800s to the 300s, so another $200 move there in the contracts. We had a 100 move down. There's a lot of volatility right now and a lot of opportunity to make money, even with the micro size contracts. That's what I love about the micros, is that I'm removing a lot of the risk. If I want to size up and I want to risk more, I can buy more contracts, right? Instead of only trading 2 contracts, I can trade 4, maybe 6 micro contracts if I really want to size up and be able to capitalize more on these moves. But in general, I'm showing you that there is potential to trade a small account. Let's say you start out with a $500 account and you're using the 15 to 10% maximum loss per day. You can start out trading with a $500 account. No worries about PDT, no worries about not being able to trade. With futures, the nice thing about it is there is no PDT, there is no pattern day trader. There is no pattern day trader rule when it comes to futures. We talk about this strategy a lot on the channel. We got this kind of breakout. We got the VWAP there. We got this basically this perfect little wedge for this move higher. Let's say I'm buying here. When we reclaim the VWAP, I'm getting in at the 860s. We get a push up to the 900s. That's a 40 handle, $40 move here on this contract. So if I have one contract, that's a $80 move, right? I made $80 off of this one trade. What's my risk off this trade? If I'm getting here long, let's say I buy at the 860s, my risk is like down here at the 850s. So I'm risking 10 handles. $10 times 2 would be $20 total risk, and for the potential of an $80 profit target. And then you can see the market went even higher as we went. So if I'm risking $10, $20 on this trade, and I walk away with $100 in profit, $200 in profit, that's a beautiful trade in itself, right? So that move, that breakout there is about 100 handles there. And we talk about this kind of setup, the overall trend going higher and pushing up there. It went all the way up to 1,300 actually, or 13,000 there on the NASDAQ. And it's funny because I talked about that during the live stream as well today. So you can see the potential here. The big problem for a lot of people starting out is that, number one, they want to get rich quick, right? Like start out with a $500 account and they want to turn that $500 into $10,000. Is that doable? You know, I think in the right conditions, the right market, you know, it's possible. It's 100% possible to do that. But the problem is, like, when you're first starting out, are you going to be able to do that realistically? Probably not. But if you start out with a $500 account, you put a 15% maximum stop on that, and you're basically risking, you know, $65 to $75 on that first day. Now you're looking to profit, you know, $100 to $200 from that $500. I think that's a realistic idea here. In 2022, it's very realistic to think that you could take a $500 account trading futures and make $100. I think that's very, very realistic. You can basically trade 1 to 2 contracts, very simple strategies. Remember, the biggest thing about this is having patience, understanding that at the end of the day, you have to get stopped out. If you're long and all of a sudden the market starts to crash, it's breaking through support, you've got to get stopped out. You got to be strict with your rules. So that's one thing. If you're trading a small account, you need to be strict. You need to really make sure that you're sticking to the plan and you're being strict with your rules, but you also need to be strict on the idea of taking profit as well. If you get a big move up, let's say you're up $50, $60 on one move, well, maybe it's time to take profit. That's one thing that I've noticed with trading the micros is that a lot of times, like, it's like easy to be like, hey, look, I'm up 40 bucks. And it seems like, oh, it's, you know, whatever, I'm up. But that's 20 to 30 handles in profit. Being up $40 on the micros, it doesn't seem like a lot in the bigger picture, you know, if you're a millionaire. But if you're trading with a $500 account and you're up $40, $50, that's a 10% move to the upside on that account based on your equity. So if you get, you know, 2 or 3 trades like that per day, making $80 to $100 per day with the maximum stop loss of 15%, I think it's a very, very realistic, solid trading strategy of forcing yourself to be like, hey, look, you know, if I hit my stop on the day, I'm done. If I hit my target for the day, I'm going to keep trading. Like, I want to keep looking for setups. Maybe I'm going to scale back, you know, in the morning. Maybe I'm trading with 2 contracts. The market's slow. I'm only trading with 1 contract. But if you really just focus on the overall plan and you focus on the strategy, I think it's very doable to start out with a $500 account trading futures. Again, there's obviously risk with anything trading. I'm not going to say that you're just going to get rich with a $500 account. It's going to take time. It's going to take pressure. It's going to take, you know, you going through it, learning, figuring it out, and kind of just going through the process, right? Like, you got to get through that process. But the nice thing about the micros is you do have skin in the game. You have skin in the game, and it's forcing you to, like, you got to actually trade. So there it is. If you guys haven't already hit that subscribe button, you want to learn more about futures, you want to learn more about trading, hit that subscribe button right now. Let me know in the comments below. Are you trading futures? Are you thinking about trading futures? I'm interested. I want to find out. What do you guys think?
Yeah.